Snipers, you have to see what's happening to the Bitcoin price right now. This is an emergency update. I never get videos out this early because I usually wait for traditional markets to close for us to observe what's happened. And now we're starting to get puzzle pieces right off the bat. We already have answers to questions that we've been asking ourselves for quite some time. So we have to discuss what's happening to the Bitcoin price right now. Smash the like button for the YouTube algorithm if you support this content, snipers. Let's dive straight into the charts. So first and foremost, I've been getting a ton of ugly messages because I didn't take a long position yesterday when we came below 40,000. A lot of you have been waiting for me to take more long positions. We took several long positions before Bitcoin ran up to 48,000. And because we were fully below the 20-week moving average and it was 3% away, I said I didn't want to take a long position until we got above the 20-week moving average again. And I'm glad I made that decision because notice how right now we've so far rejected the 100-day moving average and we have yet to see Bitcoin even test 41,950, the major resistance. That's not a good puzzle piece. But here's what's more important, snipers, and why you're tuned into this channel. And all I could ask for is for you to smash the like button for the YouTube algorithm because we forecast these important revolving parts unlike any other channel on the internet by looking at charts that are inversely correlated or correlated to these major charts. And we've got the DXY here. Everyone's watching the DXY, potentially to form a lower high. And that would start a bull market for Bitcoin as it's done in the past. But I do have some bad news. The Euro to USD pairing, which no other analyst on YouTube or the internet is going to show you, is inversely correlated to the DXY and has just broke a major support level. So what that means is every time we've seen weakness for the Euro to USD pairing, we've been in a bear market for the crypto market. And guess what? We just broke a major support. So what does that tell me? Well, it tells me this, snipers, that there's a potential right now that we are actually going to breach through the March of 2020 highs for the US dollar and see abnormal strength even above what happened in 2020. And that obviously isn't a good thing for equity markets or Bitcoin in the immediate short term. In the long term, it's fine. Bitcoin has outperformed, but in the immediate short term, it's not fine. And then guess what? To top it off, the gold to Bitcoin chart just moved above all of its daily moving averages, and this has been correlated to Bitcoin dominance. Once again, the reason you're tuned into this channel says no one is going to show you this chart, but I am. We're above all daily moving averages correlated to Bitcoin dominance, and guess what? Bitcoin dominance has yet to move above all of its daily moving averages, but we could assume that it's ready to do that, and in the past, this has been a direct effect of a sell-off in the overall market. And so 3 bearish puzzle pieces right off the bat. I'll tell you this, I'm glad I didn't add any more leveraged long positions. We took profits when Bitcoin reached $48,000. We took long positions at 39,000, 37,000 from that initial run up. And now the second one came, the second round, and we decided to not participate. Guess why? Because probabilities become a lot less. I'm not a laggard. We want to stay ahead of everyone else. We don't want to follow the masses. People have already taken long positions and have taken profits. Why are we going to be re-entering positions in when we're rejecting the 200-day moving average back below the 20-week moving average? Am I worried or concerned for the long term? Absolutely not. The Bitcoin in my ledger, in my Trezor, I'm holding, I'm not selling, I'm not concerned because guess what? There's still a lot of volume below 38,000. But what we do have to keep in mind right now is things are a little bit dangerous and we have to be cautious, and maybe right now it's the best time to practice patience. And so let's talk about Bitcoin's technical analysis. I'm going to wrap up this video so we can just get this out. It's an emergency update. And so right now, let's keep it simple, snipers. The best technical analysis on the internet, and that is guaranteed. We have a resistance of 42,000 that we must get above if we want to assume any more upside action. And then we have a support of 38,000. We are moving in between this range, but if we start to see anything outside of Bitcoin fall apart, let's say the S&P 500 continues to come down, Bitcoin has a ton of support below 38,000. We could expect a nice bounce in this area with a max downside scenario to 34,788. I would expect us to at least hold at some point or another if we see a breakdown below 38,000. And then we can reassess the situation and talk about what would happen if we break 34,788. I don't see that on the table just yet, but let's keep it all in mind because guess what? This 600-day moving average, remember, the only time we've really broke through it has been through a capitulation. And so what that means is because we're holding it as support right now, is maybe we don't see a downside trend. We just see sideways price action over the next few days until we get more answers, and then we see continuation of the upside. But if we do get below the 600-day moving average, what if it is a capitulation? Who knows? That's why leveraged long positions right now, we have to be very, very, very conditional and very specific about what positions we take. Because right now we are playing with fire inside of this range, 41,950 and 38,000. Let's continue to monitor this. If we start to see a breakdown, we'll short. If we start to see strength and some revolving parts come back in the favor of Bitcoin, we can take some more long positions. Other than that, I do not see much more puzzle pieces to really discuss. I will say this, the Ethereum to Bitcoin chart is still bullish, which is good. We just need to start seeing some of these revolving parts like the gold to Bitcoin chart and the DXY and the Euro USD chart come back into our favor to assume that we still have some momentum with this upside move. But we've clearly rejected the 200-day moving average. We are clearly below the 20-week moving average. And there is a very strong potential at this point that the DXY will surpass its strength that it saw in March of 2020. And that in the immediate short term is never a good thing for equity markets or the cryptocurrency market. So that's the main point of this video. And then the last thing is we could expect Bitcoin dominance to run back up above all of its daily moving averages based on what's happening to the gold to Bitcoin chart. So nobody's going to give you this type of analysis on the internet. Smash the like button for the YouTube algorithm if you support this content, snipers. Nobody's talking about gold to Bitcoin. Nobody's talking about Euro to USD. Everyone's talking about the DXY. Everyone's talking about Bitcoin dominance. But what's the point of watching them if we can look at other pieces that could give us an early confirmation of what's going to happen to those puzzle pieces, right? That's what four-dimensional analysis means. And with that, thank you all for tuning in to the Snipers channel today. If things change, I'll get another video out. But for now, we have to rescue that Euro to USD chart to not confirm that the DXY wants to see this type of strength. And then we also want to start seeing Bitcoin get to 41,950, recapture that 20-week moving average on the weekly chart. Because as long as we're below it, we're just kicking the can down the road. Sideways price action. We may see some dumps. It is what it is. We're below the 20-week moving average, right? So with that, thank you all for tuning in to the channel. Until next time, snipers out.